All right. So now we'll talk about student loans. And again, there will be a more in-depth discussion on financial aid next week. But student loans are a form of aid. And what we recommend is that you take student loans only when necessary or as a last resort, because loans are something that you have to pay back, which are much different than grants and scholarships, which you'll learn more about later. Generally speaking, government subsidized loans have much lower interest rates than private loans do. And there's also a grace period for repayment for government subsidized loans. So it's really important that as you think about your educational options, that you're looking at the school and the quality of your education, but also thinking about the cost of the education that comes with that. All right. Now, credit cards. They do allow you to build credit. So again, credit cards are a necessary evil in a lot of ways in our society, right? If you've ever had to, say, check into a hotel or rent a car, a lot of times they're asking if you have a credit card or a debit card. Credit cards can also help you build credit if you're able to, make your payments or pay your balance in full. That's a good way to kind of build your credit. They can also adversely affect your credit if you're unable to pay the balance owed or the minimum balance each month as well. But they're great, especially if you don't want to carry a lot of cash, maybe for larger purchases. Maybe you need to purchase a laptop computer for school or a tablet for school. It probably isn't as wise to carry hundreds or thousands of dollars to make that purchase. A credit card really can make sense to help you make those purchases. You also can get some benefits from credit cards, such as points towards things or cash back, which can be helpful. But again, as we mentioned earlier, the credit cards can feel like unreal because you don't physically see the money. So it can almost feel like monopoly money. You also do not want to use credit cards for cash advances at ATMs. Again, that's what debit cards are really for. So avoid those cash advances because of high interest rates. So be mindful when choosing a credit card too, that if you may not be able to pay the balance off or what you owe, keep in mind you might want to look for credit cards that offer lower rates, or even if they offer introductory rates of lower 0% and things like that. Be mindful of that if you don't pay, sometimes it's 17 to 25% or more in interest rates that you have to pay if you're not paying on time. So again, you can use credit cards to help you, but they can also hurt your credit score and your credit reputation as well. So just be smart and mindful with credit cards. Banking. So for students, you have a lot of options. So there are, of course, larger traditional banks such as Bank of America and Wells Fargo and Chase out there. But there are also many credit unions that are great alternatives for students, and they do oftentimes offer free savings accounts and free checking accounts with low or no minimum balances for you. So those work really great for students, especially if you don't have a whole lot of money. Some of the perks of credit unions is they're member owned and really have a community focus. So what you can find that if you don't really have a high established credit score, it may be easier to get a better rate on, say, an automobile loan from a credit union than you might get from a traditional bank, or if you're trying to buy your car from a dealership. Credit unions are a little bit more consumer friendly. So definitely think about credit unions for students, because again, they are not as cutthroat as some of the other financial institutions out there, and the profits are not the only thing that they're thinking about. Credit reports and scores. So our credit score and report can have a tremendous impact on our lives. It can affect what rate we get for a lot of things. If you're purchasing a home, if you're trying to get an auto loan, if you're trying to get a personal loan, the worthiness and likeliness that we're able to pay it back is determined by these credit scores. And 3 companies right now provide credit reports. It's Equifax, Experian, and TransUnion. Your FICO score, again, the Fair Isaac and Company, is based on your credit scores to determine your credit risk to lenders, right? So that means that the higher your score, the less likely of a risk you are to default on your payment. It means like you're more likely to make your payment. So those ranges go from 300 to 850. So again, if you're on the higher end, you'll be in the 700 and 800 range for the scores, and then the lower end will be the 3s and 400s. And so there's everything else in between. So you can build your credit by paying your bills on time, not bouncing checks, making sure that everything is paid for in time, and so that there are no dings on your credit, right? You actually are entitled to a free credit report once a year. If you're pulling it more than once a year, just be cautious, because pulling it too many times can ding your score a little bit. But once a year you get a free credit report. You also can do credit monitoring through some banks, credit unions, and credit cards offer this as a benefit as well. So ways that you can improve and grow your credit score and your credit is, again, the key is pay your bills consistently on time, because late payments can hurt your score. It's also great if you don't just settle for the minimum payment due, but really paying your balance in full is much, much better, right? And we're all in different financial situations, but if you can pay the balance due in full and not just the minimum, that can really help you build your credit, and really, again, also thinking about not spending more than you have, okay? If you do have debt, credit debt, or any kind of debt, what's key is just to take it one bite at a time and work really hard to reduce that debt as much as possible. So pay as much as you can afford to really reduce that debt. And what you'll see is if you do that, then slowly but surely your credit score will get higher, and the lenders will look at you, and credit card companies, if you need credit, will look at you more favorably if you're able to pay off that debt. So it's also better to pay off your debt than to maybe shift it, the balance or the issue of owing money to another card, right? So sometimes you'll get things in the mail or offers online like, oh, you can move it for this 0% for 6 months. But then again, you have to be cautious about things like that. Can you pay it off in that amount of time? And what is the rate going to be after that introductory period of, say, 6 months? Will it be 25%? So just be cautious. And again, if you are trying to shift it, make sure that you're getting a good deal and a good rate. Another key, and I think this is something that happens quite a bit, with all the benefits and perks that come with credit cards is a lot of people kind of sign up for credit cards because they get a certain amount of points, or they might get a free subscription to something, or they might get merchandise from their favorite sports team, or a free hotel stay, or a discount off of clothing. Be cautious about things like that because it can get difficult to track so many cards. So if you don't need cards, don't think about maybe not applying for the most cards you qualify for. Keeping your life simple and easy to keep track of. And also another key tip is make sure that you keep your oldest credit card because it is what it has established your credit history, and the length of your credit history is also a factor in terms of your credit score as well. So never cancel your oldest card. Sometimes you have to make sure you use it and are paying it off as well. But don't cancel that oldest card because really it tells the length of your credit history. Okay. In terms of student finance tips, what you can do is securely and electronically keep track of your tax forms, pay stubs, credit card statements, especially during financial aid times. And the financial aid application for the next school year is now open. Tax season, you may really need this information. But again, make sure that it's secure, and you can use a lot of tools and resources such as QuickBooks, as we talked about earlier, Excel and Mint, Bankrate.com. There are a number of great tools, and again, a lot of the credit unions and banks have their own that are built in to make sure you can track your spending as well as keep important forms and documents. And kind of want to close out by in talking about financial freedom and personal finance, the importance of saving. So as students, there are students of all ages, but if you're already saving, great job. If you aren't, now is the time to start. It's never too early to start saving. A great strategy that you can do is actually with your finances, you can actually automate savings. So if you have a job, for example, you can actually, if you get direct deposit, you can have that money deposited into, say, a savings account or a retirement account automatically, and you can have that automatically debited so you don't have to manually save every 2 weeks when you get your check or every month when you get your check. So know that you can set automations to automatically have you save. Again, this is a great strategy to make sure that you are saving and putting away money. If you work, definitely think about participating in employee-sponsored retirement plans. Examples of this are 401ks in nonprofit and public private sector jobs, but also in government jobs there are 403bs and 457 accounts. These are all examples of retirement accounts, which are pre-tax retirement accounts that oftentimes employers will also match what you put in. But again, compound interest. So if you put money away early, in the long term, actually with interest, your money will actually grow quite a bit by investing and saving early. So the key is to really invest smart and cautiously. Also consider a life insurance plan just in case life happens. So here are a few resources that you can look at, and also some folks that are really into personal finance like Susie Orman, Ramit Sethi, and Dave Ramsey, who you can research online. I hope you learned a lot, and next week we'll talk financial aid and scholarships.